Okay, hey guys, this is the anatomy of a candlestick revisited. I'm not going to get into the whole thing. I just realized when I recorded it, and like I said, this is my second video now. This one's my third, so I'm trying to really get it right the first time, second time, third time, really, without having to re-record and do edits and that sort of thing, because but we'll see how it goes. Okay, I realized when I explained candlesticks to you guys, I might not have been really clear about something, and it's critical that you understand this point, so I wanted to reiterate, or rather there was something that I wanted to clarify in here when I showed you that chart. Okay, when I meant that candlesticks open, bullish candlesticks open on the bottom, and they close on the top, and that bearish candlesticks open on top and close on the bottom. Let's jump over here to this chart because I happened to catch the video I just released a couple hours ago. And I don't think I was clear on something. Okay. And, if you already understood it, just skip right past this. But I'll probably get, comments from people who didn't really get what I was saying. Okay, we're on the 1 minute chart. So each one of these candlesticks represent 1 minute. Now, if I were to change this to a 5-minute time frame, then each one of these candlesticks would take 5 minutes to form. If I would change this to 3 minutes, each one of these candlesticks would take 3 minutes to form. I could change this to a day or a month, and each one of these candlesticks would represent 1 day or 1 month of price action. Okay. Now, when I'm looking at a rip like this, and I said, okay, well, bullish candlestick will open on the bottom and close on the top. And I'm talking about it opened here. And then I'm going to tell you that it ripped all the way up to, yes, it did rip all the way up there, but each candlestick is a minute of price action. So it opened here, closed here, opened here, closed here, opened here, closed here. So it's like stair steps, and it keeps doing that every minute. Each one of these candlesticks, it'll be like it opened here, went this high, pulled back, closed here. Then notice where the next one started. Opened here, went this high, fell back to here, closed here. Then this one opened here, right? Dipped this low, ripped all the way up this high, and then closed here. And it'll do that like stair steps all the way. And then you see where it kind of makes sense, because if that's the case, and this one, right, opened here, closed here, then this one here opened here, and you're thinking, oh, price action is going to keep going higher. So it ripped here, and you're all ready for it to go higher, and it didn't. Boom, it dumps out, and you're thinking, shoot, this is getting ready to reverse. But no, the buyers bought it up to here, and it closed here. You see what I mean? So literally, if you think of where this candlestick opened, where this one closed, that's the way these work. Now, sometimes you'll have so much price action, the price action will be so severe that you'll have something called a gap up. So you literally won't have a candlestick start anywhere near where the next one is. See how this red candlestick is actually higher than the green when the price action actually opened higher than where the last one closed. Like this one closed here. The price got this high, but then it pulled back and closed here. Okay, opened here, went this low, went this high, closed here, and then all of a sudden you see the next candlestick start up here, and you're like, oh man, this is gonna be good. This thing's gonna rip straight up, but it didn't. It went this low. It might have went this high first, then ripped this low, and then came back and came to rest here. Now sometimes you'll have something called a gap up, where the candlestick won't be anywhere near here. This one will close here, and the price action, say we're on the minute chart, in between the minute that it takes the next candlestick to form, there are so many buyers that the next candle will actually start here or here. Like it'll literally create this massive gap in price because there were so many orders that it rocketed the candle all the way up here. So you'll have a gap where this will be the close here. Then all of a sudden, the next candlestick will start up here. And this is fantastic if you're going long. If you're going long, you're thinking, oh man, this is going to be beautiful. And it'll just rip. Well, the same thing can happen in reverse where, and usually there's an indication of it, unless you're trading penny stocks. And then if you're trading penny stocks, it's stuff that's like $1 to like I think $10, you know, or under $10 or something like that. I mean, you can get just blitz because it'll close here, and then all of a sudden the next candlestick will open down here, and you're already under $700-800, which is another reason why we don't trade penny stocks. At what I'm teaching you, and what I learned from Pat over at Trick Trades, and what I learned from Kelvo over at Trick Trades. This is why we don't trade penny stocks, because you can just get ripped in penny stocks, and we'll talk about that more later. But that's it. That's the recap. I wanted you to understand that when I say open and close, I'm not saying that it opened here and closed here. I'm saying that each one of these are like stair steps. Opened, closed, opened, closed, opened, closed, opened, closed. See what I mean? Price went that high or went that low, but these are open and closed. These are stair steps along the way. Okay, and you'll see the same thing in reverse. These are stair steps, okay? So there you go, where the price opened, closed, opened, closed, opened, closed. Look how it's falling. Open, close. You see, all the way down. It opened here, closed here, and then it'll just keep doing that all the way down. And I mean, the perfect example, it opened here, boom, closed here. Next one opened right under it. Look at that. Right under it to continue the trend. If this had been a 2-minute chart or a 5-minute chart, we would have one long candle. But we don't. It opened here, closed here, because it's a 1-minute chart. The minute's up. And then it starts the next one. Opened here, closed here. And then it'll keep doing that. So, okay, that's it. Just wanted to, for people, because I'm sure I'm going to get comments like, what do you mean? Blah, blah, blah. So, I wanted to clarify that. This is sort of a recap or revisiting. People that know what I was talking about, you just skip right over this. Now I'll just put that in the title. It's not really important. The next one's going to be on moving averages, so you'll understand these lines, what they mean, and you'll be trading. We're going to have you guys setting up trading accounts within the next 4 lessons, if that. You'll be setting up a trading account. You'll be ready to go, and it's just going to take lots of practice until you get comfortable. Just lots and lots of practice, you know. And you'll have it. No problem. Okay, bye-bye.